Hi guys, welcome to your own show MKJ Talks for Investment in English. Guys, large number of new investors have joined my channel, both this one as well as the other one, and they keep asking me, sir, tell us what are the different ways of earning money in stock market. Every other day they will ask me, and they are very much confused about the terms like intra-day trading, swing trading, positional trading, long-term investment. Sir, what do you mean by this? We don't understand. So on their request and on the basis of their need, I have come up with a unique video where I'll explain you the different methods of earning profits in stock market. But whenever I say different methods of earning profits in stock market, it automatically implies different methods for incurring loss in stock market. But because in stock market, profits and loss goes side by side. If you are vigilant, you will earn profit. If you just blink eye carelessly, you will lose money like anything. So you have to be very vigilant like an eagle. That's why I have given my phrase, gone are bulls, gone are bears, eagle is the winner. Let's be clear. So you need to be an eagle. So let us start. So I will classify the different ways of doing investment or trading into stock market into four broad categories. The first one is day trading or intraday trading. Second is swing trading, third is positional trading, and fourth is long-term investment. So let me describe all these things one by one. First of all, day trading. As you can read on the screen, day trading is speculation in securities, specifically buying and selling financial instruments within the same trading day. This is important. Within the same trading day, such that all positions are closed before the market closes for the trading day. Traders who trade in this capacity with the motive of profits are therefore called speculators. So day trading has largely been identified with speculation. Here what happens, you square off your transaction on the same day. I'll simplify it. It means if in the beginning of the day you are purchasing shares, then by the end of the day you will sell it. And if in the beginning you are selling the shares, then by the end of the day you will purchase it. That means your net position will be zero. I'll explain you. Suppose you feel that a particular stock is likely to increase by rupees 10 in the day, during the day itself. Then you purchase it. Says you have purchased 1000 shares of that company and the stock increases by rupees 10, you sell it. What happens? You corner away with a profit of rupees 10 on 1000 shares, that comes to 10,000 rupees. So in the beginning you purchase the shares and during the day itself you have sold it. So your net position is zero. Whatever you have earned is your profit. Out of that profit you will give little bit brokerage to the concerned trading platform and rest you will take home. And the unique feature of intraday trading is that you can even sell the stocks which you don't have. Why? Because you are not going to carry forward your trade to the next day. So suppose in the morning you feel that a particular stock will fall, then you sell it in the morning. And the stock behaves as expected, and during the day itself the price of the stock has fallen by 10 rupees, you purchase it. So you sold it when the price was high and repurchased at the level when the price was low. So as a result, the fall in price is your profit multiplied by number of units which we have sold in the beginning and purchased in the end. So here the thing is, you will never carry forward your position to the next day. On the very same day you will square off your transaction, and that is known as intraday trading or day trading. A person has to be an expert while doing intraday trading, because during the same day the stocks fluctuates like anything. Sometimes the trade will not move as per your expectation. You are expecting the price to rise, instead it will fall. And once you will, out of fear, you square off your transaction, it will rise. I mean, you have to be very vigilant and you have to be very prepared. Lot of technical knowledge of various kinds of technical techniques is required to enter into a day trade. The popular ones are candlestick, RSI, candlestick analysis, RSI, then MACD, then Bollinger Band, then pivot points. So many, there are so many ways, and different people on the basis of different technique, they do intraday trading. So my suggestion is, unless you are an expert in stock market, you should never indulge into intraday trading. So intraday trading is a trade for a day itself. Now coming to a swing trade. In a swing trade, you enter into a trade for one day or for a week. In other words, if you purchase a security now, you would like to sell the same in a very short period of time, which may be one day to 1 week or to 1 month. Normally we don't carry it forward for a longer period. People, they try to square off it in couple of weeks and market the difference, or you can say pocket the difference as profit, or the difference may be a loss. The thing here is, here you need to invest your shares or your money. Suppose you are bullish on a share. Bullish means you expect that the share price will rise. Then you invest your money, purchase the share and wait for a couple of days or a couple of weeks. When the price goes up, sell the shares, get back your money with profit. This is swing traded. And instead, if you feel that a particular share price will fall and you hold that share in your DMAT account, then you sell those shares now. Okay, you will get the money, keep the money with you and keep waiting. Once the price falls as expected, repurchase the shares sold earlier at a lower price, and the difference will be your profit, and you will get back the shares which you sold in the beginning. So here the important thing, unlike day trading, is that if you want to purchase and sell, you need to have cash, and if you want to sell and purchase, you need to have shares. But in case of day trading, you can do without having complete amount of cash or shares, because there you need to deposit margin. Margin is a proportion of total transaction, which I will discuss in great detail in the separate video regarding day trading. So here I am comparing all the ways of trading in stock exchange. So let us be slightly brief. So this is known as swing trading. So the difference between day trading and swing trading is, day trading is squared off on the same day, and in swing trading you square off your position within a next couple of days or couple of weeks. Now coming to positional trading, here the time duration gets increased. Here you enter in a trade with an objective of holding, keeping your trade open for 1 month to couple of months. You may square off in weeks also. If you find in couple of weeks, if you find the script has gone in your favor, you can square off in couple of weeks. So we can say here, normally you enter into a trade with a couple of week or couple of month perspective. Here the risk is relatively less because you try to avoid short-term fluctuations. You enter into those stocks which are fundamentally good but technically weak. You see that this stock is fundamentally very good but is technically weak. The markets are adverse to the stock, so the stock has fallen. You invest your money, purchase the stock, wait for couple of weeks or a few months. When the price has gone up, sell the share, get back your money along with profit. And in case you feel that a particular stock has been overvalued, although its fundamentals are weak, and you hold that stock in your portfolio, then the best way is to sell that stock now, and in a couple of weeks or in a couple of months, when the prices have actually moved down, repurchase that stock. So initially you sold it at a higher price, later you purchased it at a lower price, and you got back your stock along with profit. So this is the strategy in case of positional trade. The time difference is different for three kinds of trade. I'll just repeat: intraday is squared off within the day itself. Swing is squared off within a couple of days or a few weeks. Positional trades are squared off within a couple of weeks or few months. So this is the basic difference between these three kinds of trade. And apart from this, there can be an investor who wisely selects fundamental good stocks for a long period of time. This period is normally greater than 1 year, 2 year, 3 year, depending upon the kind of stock. I know large number of people who are holding blue chip stocks like HDFC, HDFC Bank, TCS, Infosys, Hindustan Lever, ITC, Larsen and Toubro for last number of decades. You will be surprised to know people are holding these stocks for decades. So they are long-term investors. They purchase a stock and they enjoy a capital appreciation of the stock along with good dividends, and they find their investments gets multiplied manifold over a long period of time. So here the strategy is totally different. Here the strategy is to pick blue chip stocks and hold them for a very long period. Forget about monthly movements, weekly movements, yearly movements. Think of 5, 10, 15 years. I mean, in this case, the stock you select should be very good, fundamentally very good, belong to industry which will remain in existence for the foreseen future. You cannot invest in a dying industry. For example, I will give you an example. Suppose you are investing in, you can say, cigarette industry. It is very risky. If a company is engaged only in making of cigarettes, then investment in that company is very risky, because cigarette is considered to be a sunset industry. But if the same company, along with selling cigarettes, to the time possible, they are diversifying into various other business like FMCG, hotels, and giving you an inkling of ITC Limited, then you can invest in such company for a long period of time. So this is the difference between 4 ways of making profit in stock market. If you want to make profit daily, I'm just summarizing in the end. If you want to make profit daily, go for intraday trading. You want to make profit weekly or in couple of days or in a couple of weeks, go for swing trading. If you want to make profit in couple of weeks or in a few months, go for positional trading. But if you want your investment to get appreciated like anything, you want good dividends, then invest and forget. This is known as long-term investment or long-term investing. I think the entire idea is very clear to you and you have enjoyed the video. If yes, then please press the like button and share the video with your friends who are always perplexed regarding the terms intraday trading, swing trading, positional trading, long-term investment. After seeing this video, there will be no confusion in their mind. In future videos, I will be talking about all these 4 items one by one to give you a greater in-depth insight in all these ways of dealing in stock market. So with this, I would like to request you to subscribe my YouTube channel as well as Telegram channel, because I keep giving latest updates on Telegram channel. And if you don't have a DMAT account or a mutual fund application account, please visit description box of my video. All the links for good trading as well as mutual fund platforms are given there. Apart from that, if you are interested in joining my silver, gold or diamond membership, the link of the same is also given in the description box along with the link of my Telegram channel. You must read description box of all my videos because I give lot of important information over there. With this, I will say bye bye to you. God bless you. Happy investing. May God help you earn lot of money in stock market. Bye bye.